Welcome to BISP Solutions. I'm Anshi Chen, and today we will see change in ownership percentage by period into our FCC's application. By change in ownership, we mean that, for suppose in the month of January, we have a subsidiary parent company was holding 90% of the shares of subsidiary company, but in the month of February, percentage of holding has changed to 70%. So we will look for the adjustments of goodwill, retained earnings, and net non-controlling interest. Let's get started. I've created the smart view of my accounts, and I've defined my POVs as well. Now we will input the number and then submit it. Let's input the numbers. Let's take data as 85,000, 1 lakh, 1,50,000. Common stock as 5 lakhs. Creditors as 15,000. Income as 2 lakhs. Direct wages 55,000. And salary as 1,25,000. Let's input numbers for our subsidiary company. Not 101 is our holding company, and not 102 is our subsidiary company. 65,000, 1,50,000, 1,50,000. Common stock as 3 lakhs. Creditors as 25,000. Income as 1,50,000, 20,000, 90,000. And investment in subsidiary, let's take it as 2 lakhs. And let's submit the data. We have just inputted the figures, and now we will run the rule of consolidation. It is in process. As we can see, our data has been submitted or is inputted, and there is a difference of 2 lakhs. So difference of 2 lakhs, and we could see investment of 2 lakhs over here. Now we will go to our application to run the consolidation. We will go to applications, consolidation, and we will define the percentage of holding of for our parent company. We will check our POVs, whether our POV is correct or not. Our period was January, so I will change it to January. My entity is not, scenario is plan, year is 2015, and period is January. Let's search for our entity. It's 101, not 102. We will change it to holding percentage to 90%. When we change it to 90%, minority interest comes to 10%. Now we will save the changes. Click on Save Changes. Now we will recompute the ownership. Let's check our POV once again. Scenario was plan, year 2015. Start period is January. Recompute. Successful. Now we will run the rule of consolidation. We will go to Navigator, and then we'll go to Data. We will search for a company, not 101, not 102. We could see the status as impacted. Now we will run the rule of consolidation. entity is correct. And the period is January. We'll select January. Scenarios plan. Year is 2015, and then we will click on launch. This processing. Rule was run successfully. Now we will see the status of our holding and subsidiary company, parent or subsidiary company has been changed to OK. Now we will go to our smart view. Then we will go to output. I've already created the smart view and defined our POVs. And POVs will be of consolidation, the one which we use for the consolidation purpose. Now we will click on refresh. When we click on refresh, we could see the consolidation has been done. Let's check whether the consolidation has been done correctly or not. Let's copy the column. And let's change the entity. We could say our consolidation has been run successfully because investment in, when we do consolidation, when we prepare the consolidation, investment in subsidiary gets eliminated. So in our case also, it got eliminated. We could see investment in subsidiary figure is 0. Now we will check the consolidation has taken place or not. Our entity, our parent entity was not 101. And our subsidiary entity was not 102. Let's refresh it. As we can see, 85 debtors, 85,000 plus 65,000 is 1,50,000. 1 lakh plus 1,50,000 is 2,50,000. 1,50,000 plus 1,50,000 is 3 lakh, and so on. Let's check our goodwill calculation, which is important. Our goodwill is minus 70,000. That reflects that it is not goodwill, it is capital reserve, retained earnings, and minority interest. Now let's check. Now let's see how we have calculated all these figures. Let's first calculate it goodwill. Investment from subsidiary. It was 2 lakh. Now net assets of subsidiary. Net asset of subsidiary is 90% of 3 lakhs. 3 lakh is the common stock of subsidiary company. 3 lakh. 90% of 3 lakh is 2,70,000. Investment minus net assets. This is our goodwill. Now let's calculate retained earnings. Retained earnings of parent. That is how much? 20,000. We could see 20,000. Retained earnings of subsidiary. We will take that portion of subsidiary which we have invested. So the retained earnings of subsidiary is how much? 40,000. So 90% of 40,000 is, we'll calculate here, into 0.90, that is 36,000. Our total retained earnings is 56,000. Let's check. Okay, let's check it also. 56,000 retained earnings consolidated is 56,000. Goodwill is minus 70,000, and goodwill is minus 70,000. Now let's calculate minority interest or non-controlling interest. Retained earnings, stock of shares of subsidiary. That is 10% of 3 lakhs. That is 30,000. Retained earnings of subsidiary. That is 10% of 40,000. That is 4,000. A minority interest is 34,000. Let's check. Yes, 34,000. This was the simple consolidation which we have run. Now we will change the ownership percentage in the month of February. Now let's suppose in the month of February, I've already created the smart view. Now for suppose in the month of February, a few transactions took place. So we will input the figures in the month of February, and I've already created the POVs. Let's for suppose 50,000, income 30,000, 20,000 for the subsidiary, and when percentage is reducing from 90, let's for suppose take it as ownership has been changed to 70%. So our investment amount will reduce. So let's suppose say it has been reduced to 20,000. From 2 lakh, our investment amount has been reduced to 20,000. Okay, now we will submit the data. Our data has been submitted. Now we will go to our application and do the consolidation process for the month of February. Application, consolidation, period has been changed to February. Rest all scenario in here is same. We will search for our entity, North. Now here we will change this 90 to 70. See, our minority interest has been automatically changed to 30. We will save the change. And now we will recompute the ownership data. We will again check the POV, scenario, plan, 2015 and February, recompute. Our recomputation was successful. Now we will run the rule of consolidation. Through Navigator, we will again go to data. Not 101, 102. See the status, it has been changed to impacted. Now we will go to actions, business rules, consolidated. Here we will change the period. Click on OK. Scenario and year is same. We will click on launch. Our rule has been successfully run. We will see the status. Now its status has been changed to OK. Now we will go to our Excel sheet. I've already created this smart view for output as well. We will click on refresh. We could see our consolidated figures. Let's check our figures also. Now here also the important thing is calculation of goodwill because of the adjustments we have made in the ownership. We could see investment has been 0, retained earnings. Let's check whether the consolidation has been done correctly or not. Something is went. Just wait for a second. Something is wrong. As you could see, I've pasted the column here, and now we will change the entity and see. Not 101. Refresh. When we refresh it, we could see that our investment in subsidiary has been changed to 1,80,000. Previously, in the month of January, it was 2 lakh rupees. Now we will calculate the goodwill. Retained earnings and minority interest. Let's calculate goodwill. Here, goodwill calculation requires a few adjustments because we have reduced the investment. So we will take the reduced investment as minus 20,000. Then net asset of subsidiary. Now in net asset of subsidiary, we will combine common stock and our retained earnings together. So in the month of January, our common stock and the retained earnings for the subsidiary was 3 lakh was the common stock. Yes. And retained earnings was 40,000. So we will calculate the net assets of the change net asset. So 3,40,000. Now, what percentage we will take? Now, this is not net assets of subsidiary. Change in net assets of subsidiary we are calculating. change in net asset. Yes. Now, as our percentage has been reduced by 20%, so we will, and now we are calculating the change. Therefore, we will calculate 20% of 3,40,000. 20% of 3,40,000. So 40,000 into 0.20 comes to 68,000. So net effect in our goodwill will be of, sorry, will be of, we will add both these, is of 48,000. Okay, but we have a goodwill in the month of January also. Again, the system is hanging. Goodwill of January. That is minus 70,000. Now total comes to minus 22,000. We could see our goodwill is minus 22,000. Now we will calculate the retained earnings. For retained earnings, now the retained earnings of holding has been changed because there was some transaction in the month of Feb. Of parent. That is, retained earnings of parent is 50,000. Now, we will take the retained earnings of subsidiary. There is also an adjustment in the retained earnings of subsidiary. Now, opening retained earnings for the subsidiary was 40,000. We could see in the month of Jan, retained earnings was of the subsidiary was 40,000. Now, 90% of 40,000, we will calculate here. Opening retained earnings. That is, we are taking 90% because previously our holding was of 90%. So 40,000 into 90. Okay. Then we will take the difference. Now our retained earnings has been increased to 60,000. Additional retained earnings. That is 60,000 minus 40,000 is 20,000. 60,000 is our is the retained earnings of February. 40,000 is the retained earnings of January, and then we will calculate the actual percentage. That is 0.70, because now our holding is 70%. That is 14,000. So our adjusted retained earnings is how much? 50,000. Now, this is the adjusted retained earnings of subsidiary, and now we will take the adjusted retained earnings of subsidiary for the calculation of retained earnings for the month of February. So total retained earnings of the consolidated entity is 1 lakh. You could see our retained earnings is 1 lakh. Now we will calculate the minority interest or non-controlling interest. Minority interest, we will take this share of subsidiary, that is 30% of 3 lakhs, that is 90,000, and retained earnings of subsidiary, that is 60,000 now. So 30% of 60,000 is 18,000. A total comes to 1,08,000. Our minority interest is 1,08,000. Now we have seen the adjustment made. We could also see the comparison between both the months. Like this is the month of January, this is the month of February. In the month of January, my goodwill was, or capital reserve was 70,000, or goodwill was negative 70,000. In the month of February, it is negative 22,000. Minority interest was 34,000, and now in the month of February, it is 1,08,000. Retained earnings in the month of January was 56,000. Now in the month of February, after the change of percentage ownership percentage, it is 1 lakh. And investment has already reduced, as I have shown you that in the Excel sheet. That's all for today. Thank you. For any queries, please reach out us at www.bispsolutions.com.